PK Gupta, Managing Director at State Bank of India, is joining us on the phone line. Mr. Gupta, thanks for joining us. Sir, your understanding of how this will play out, I know you already have a product, but from 1st October, all new products will have to be linked to the repo rate?
Yeah, see, we already have a lot of products which are linked to the repo rate. I think the difference it makes now is that as per the circular, so all the new products which the RBI has specified will be linked to the external benchmarks. See, right now, for example, we have the home loan product, but we have the MCLR product also. So the customer have a choice to take any one of those two products actually. But I think the MCLR linked product obviously will have to be withdrawn from 1st of October. So we'll rework and see how do we introduce this new product actually and how we go ahead. But, the issue always for the banks would be is that, we are doing it on the asset side. We'll have to work out some mechanism on the liability side also so that, we can work with the NIMs actually that we have been having.
Mr. Gupta, how does life change for a floating rate borrower, an existing borrower, once this kicks in?
Yeah, I think that is where the challenge for the bank would be actually because, as a bank, we have a quite substantial home loan portfolio. So the moment we shift actually the existing portfolio over a period of time to the benchmark rates, so what impact it will have actually and how do we ready ourselves to see that, we get the same kind of benefit on the liability side is something as a bank we will have to work it out actually.
Mr. Gupta, two questions. So on the liability side, is the first or easiest option to link make your bulk deposits linked to a floating rate system? I think your chief economist had also recommended that that's an option.
Yeah.
Is that the way to go?
See, there are a lot of options, but, our experience is that one bank doing it doesn't work actually. I think the whole ecosystem has to develop actually. And if there are regulatory guidelines, it helps actually. So we'll have to see how it goes. As a banking industry itself, now that everybody will have to do, till now we had taken the lead actually doing these products on the asset side. Some public sector banks have joined us. Now that even the private sector banks will be there. So I hope that there will be something which will emerge on the liability side so that we are able to link on some of the liabilities at least. The options always are, of course, savings bank we did actually. What more can be done is something that will have to be examined. Bulk deposit is one option. I think there are small savers for whom probably linking to a floating rate doesn't make sense. But for the bulk deposits, maybe with a cutoff of 2 crore or 10 crore or 100 crore or whatever it is actually, if you link them to the floating rate, so it will help the bank to do the transmission on both sides of the balance sheet.
Mr. Gupta, the other thing everyone is saying that banks will have to hedge interest rate risk via various products that are available in the market. Requesting your understanding, sir, on what are the products that are available to hedge interest rate risk. Also, given the low volumes in some of these markets right now, would it be feasible for banks to actually use these products to hedge interest rate risk?
Yeah, I think all those options are getting discussed. But ultimately what will happen is if all the banks are on the one side of the hedging actually, then who provides you the cover on the other side and how deep the market is, how much the banks can really cover under that. Then, what impact it has on the balance sheet when your loans probably don't get marked to market, but your hedges get marked to market. So what volatility it brings onto your balance sheet. So those are some of the things which as a bank we'll have to look into before we go and do any of those things.
One last question, Mr. Gupta. Right now we are in a falling interest rate environment. So I know everybody is focused on the fact that interest rates will fall, but, interest rates will turn around as well. So it's important to realize that this works on both sides. In a rising interest rate scenario, banks will benefit, but customers will lose more quickly.
Absolutely. I think it works both ways actually. So that is why, even though we introduced the repo linked product, we found that borrowers continued to prefer the MCLR linked product because they felt that, there was more certainty of their EMIs or the installments they have to pay. Obviously, right now we are in a falling interest rate scenario, so everybody is excited about it. But I think the moment interest rates are moving the other way, so that is when we'll have to see how it goes actually.
All right, Mr. Gupta, thank you so much for joining us. Appreciate your time, sir.